So today we start with admission of a partner. It's a one shot sorts. Very quickly, I'll try to cover all the points relating to admission. What happens in admission is say A and B are partners. C admits for one fourth share. She's asking for the share. Now there's an issue who will give his share and why should anyone give his or her share. So he motivates them by telling, "Oh, it's okay, if I'm coming, I'll bring some capital for you." So they need money rather than borrowing. They need help uh, in terms of humans. They need money, so they are happy to have a new partner and they're ready to sacrifice their share for this person. Now, who will sacrifice? How much will they sacrifice? Depends on the situation. And they've worked hard, they have earned a reputation that business is earning certain profit, and how can this new one see just come in and take advantage of that? So they would ask him for goodwill, which will be a compensation for the additional profits they are able to bring for the firm because of their hard work. So here this chapter involves various adjustments on admission of a partner. First would be calculation of ratio. Who will get how much profit? What will be their new ratio? How much is the sacrifice made by whom? Second is treatment of goodwill. How will we treat this goodwill? Only the one who is sacrificing should get this goodwill. Is this person bringing this goodwill in cash or not? Thirdly, we will revalue assets and liabilities and reassess all liabilities. We'll see their changes, and those changes were when these two were partners. So this person doesn't need to get that share. We do the adjustments. We also call it as revaluation or P&L adjustment account we prepare, and we give this profit or loss to the old partners. Post that, we make adjustment for general all accumulated profits losses like general reserve, etc. There are certain special one, workman compensation fund and all that also we will study. And post that, we will make any capital adjustment if the question is asking for it. So let's come to the simple case of calculation of ratio. A and B are partners sharing in the ratio of 3:2. C admits for 20% share. 20% means one fifth share. What will be the new ratio? Now, here they have given you no other information. So, what we do, we use unitary method. Say if C comes in for 1 by 5 share. So, if let the total share be 1. 1 minus 1 by 5 is 4 by 5. So A and B will get their old share only, but what? The leftover amount 4 by 5. They get this 4 by 5 in the ratio of 3 by 3 is to 2. 3 by 5, A will get 4 by 5 into 3 by 5. D will get 4 by 5 into 2 by 5, and C is already getting 1 by 5. So this is 12 by 25. This is 8 by 25. I multiply, divide this by 5. This becomes 5 by 25. So new ratio becomes 12 is to 8 is to 5. So 1 minus new partner's share, that should be divided in that ratio. Now there is one more concept. This is new ratio. What is sacrifice? Sacrifice is old, what you were getting, minus new. Because obviously you're getting less, you're giving a part of your share to the new person. So sacrifice, sacrifice is equal to old minus new. In this type of question, you can check old will be equal to sacrifice ratio. Which type of question is this? Where old ratio and new person's share is given. In these questions, old is equal to sacrifice ratio. There is another possibility of from case. Over here, it's given A and B are partners, sharing in the ratio of 7 is to 3. C admits for one fourth share, which he acquired 1 by 6 from A 1 by 12 from B. So 7 by 10 minus 1 by 6. Here 3 by 10 minus 1 by 12. So this will be the new ratio of A, new ratio of B. C is getting 1 by 4. We know that. You can work on the LCM and all and find out these ratios. The word from leads to the word leads to minus. Next, of case. Of Bodmas rule also, if we see, of means multiply. A and B are sharing in the ratio of 5 is to 3. C admits and C gives 1/5 of his share. What is C's share? Sorry, what is A's share? 5 by 8. What is he doing? Giving 1 by 5 to C. Who's the other person? B gives 1 by 12 of his share. So C gets from A this, and from B he gets, B's share is 3 by 8 into 1 by 12. This is what they are giving to C. What was A having? 5 by 8. Is he still having 5 by 8? No, he has given 1/5 of 5 by 8. So when you minus this, you will get A's new share as 4 by 8. 5 gets cancelled. B's share was 3 by 8. Now he gives 1/12 of 3 by 8, and now you can find his share, and C's share is a total of sacrifice made by these two. So this was a case of off. Of we multiply, from we minus. It's possible for one person from is given, the other person of is given. So apply the rule accordingly. Read the question carefully. Now comes goodwill. Goodwill is your ability to earn more profits than other. This is a reputation you have developed over the time. So goodwill can be brought in cash or in kind. Maybe they can bring some asset. When they bring it in cash or as asset, this is the entry to be passed. Cash, they say they are bringing in cash. This goodwill is called, which is brought in cash, premium for goodwill. This account gets credited. Now this premium will go to sacrificing partner. This is not for everyone. This is only for the one who is sacrificing. Goes to sacrificing partner. We increase sacrificing partners share by crediting them. Say A and B were sharing in the ratio of 3 is to 2. C admits for 1 by 5 share, which he gets from A only. So over here, if he brings 10,000 as premium, cash to premium for goodwill, he brings 10,000. Now this premium for goodwill 10,000 goes only to A, not to B, because sacrifice is made only by A. But if it was made equally by both, then 5,000 each would have been given. And this person doesn't bring full goodwill, only his or her share. Now secondly, if he or she says that sorry, I cannot bring goodwill in cash, we pass one entry. And in this entry, new partner's current account gets debited, sacrificing partners get credited. If part of the goodwill is brought in cash, not the full, then it's a combination of previous two cases, cash to premium for goodwill with the part brought in cash, and then we have premium for goodwill brought in cash. New partner's current account gets debited for goodwill not brought in cash, and sacrificing partner's capital account gets credited in sacrificing ratio. And this would be what? New partner share of goodwill. Then we come to the concept, as I was telling you, P&L adjustment account. We make adjustment in assets and liabilities. as you can see from the smiley, decrease in asset, increase in liability are bad for us, or any unrecorded liability is also bad. Increase in asset, decrease in liability is good for us. If, and if we have any unrecorded asset, that is also good for us. After writing these, we find out if we are having profit or loss. If credit side is more, then we have gain. If debit side is more, we have loss. And this goes to old partners in old ratio. New one will not take it whether it is gain or loss. It belongs to old people, let them take it only because it's during their duration all this change has taken place. Then let's come to the capital account. What all we need to show in their capital account. Usually reval and capital is asked nowadays. So brought down, this you get from the balance sheet. This would be there for old partners only. Say A, B are there, C comes in. Cash is introduced by C as capital comes here. Goodwill, premium for goodwill or current account, depending on the case, how much goodwill is brought in cash comes here, goes to any one of these two or both of them in sacrifice ratio. Reval gain goes to these two only. In which ratio? Old ratio. Similarly, accumulated profit goes to these two in old ratio. Accumulated profit could be general reserve, P&L, contingency reserve, reserve fund. These are the words which are used. These belonged to old partners, it goes to them. Then if any accumulated loss, P&L on asset side which is given, deferred revenue expenditure, those come here. Then revaluation, if you have loss, it goes to A and B in old ratio here. Goodwill, existing goodwill given in the balance sheet is written here, given only to A and B in old ratio. Then if any cash is withdrawn by any partner, it should come here. And last point is the balance left for these partners at the end of all these adjustments, all these postings. Now comes the next concept, and that concept is of capital. Okay, accumulated profit losses. I just shown you there, but there are some special ones which we need to take note of. See, depreciation fund, employee provident fund. These are not reserves. This is our liability, employee provident fund. Don't distribute it ever. Now let's understand workmen compensation fund and your uh, investment fluctuation fund. Let's understand these two. There has been this concept has can be explained as PPT also. Let me explain it separately here. So if we have workmen compensation reserve, the very crucial thing which is going on right now is that all these 10-minute apps which we have are ensuring risk to the life of those who are delivering these products to us. So every company has an element of risk in their business. That risk of giving compensation needs to be provided for, and for that they might have workmen compensation reserve. Now this has been set aside out of the profits. These profits belong to the old partners. If there is a claim, there was an accident, certain amount has been claimed, give it from here. If there is no claim, this belongs to old partner in old ratio. Let's see one example. Say workman compensation fund is 50,000. The claim is not given in the question, it is 0. So A and B were old partners sharing equally. So we give workmen compensation fund to A and B this 50,000 as 25,000 each. But if this claim was rupees 10,000, out of 40, 10 used, Out of 50, 10 used. 40,000 needs to go to A and B. Workman compensation fund is 50,000. Claim is 10,000. So A and B get 40,000 in their PSR, which is equal 20,000 each. Now, if this turns out to be claim turns out to be 50,000 only, then nothing goes. If claim is 60,000, then what do we do? 10,000 extra. So workman compensation fund gets debited. This extra 10,000 is the additional liability goes to reval. So workman compensation fund is 50k, revaluation is 10,000, and we have to give a claim of 60,000 rupees. So this is how it is treated. Similarly comes another thing, investment fluctuation fund. It's not compensation, investment fluctuation fund. What is investment? We invest money somewhere, market keeps changing, the value of investments keeps changing. So IFF is kept to keep a reserve to handle that tension. So when we create this, we need to know what is the book value in balance sheet, what is the value of investment, and in additional information, you would be given the market value of investment. So we see the relation in these, and this usually this is to absorb the decrease in investment which is taking place. This is to safeguard us against that decrease. So if I have investment fluctuation fund same way of 50,000 rupees, in balance sheet my investment is rupees 1 lakh. If I'll change different give situations of market value, if market value of my investment is 1 lakh only, so full 50 goes to old partners in old ratio. IFF goes to A and B, let them be sharing equally. 50,000, I give 25,000 each. But if market value of investment is 90,000, it has reduced by 10. So 10,000 I get from here, 40,000. So it becomes IFF 50,000. To investment, there is a decrease in investment of 10,000. To A and B, give 40,000 as an equal ratio, which is their PSR in this case. But if it is 50,000, so whole 50 is used, nothing goes to partner. If it is 40,000, that means 10,000 extra increase goes to reval debit side. If it any increase is there, it goes reval credit side. One of these will be there either in admission or in retirement or in dissolution or in change in ratio for sure. Never ever it is possible to have a question without workman compensation fund or IFF, and it can be tested in various topics, so accordingly you need to be prepared. You can make a chart how to treat it in different topics so that you don't go wrong. These are some things given on asset side which goes to partners account debit side. These are accumulated losses. Now comes the case where we need to make adjustment for capital. We may not take the capital of partners as it is. We need to make adjustment for that. There are two things in that. First, you are given new partners capital and you are expected to adjust capital of others according to that. Second thing, you are given capital, you are not given capital of the new person, you need to find it out. Let's understand this concept with the help of example. Say, you prepare reval account, you prepare capital account, and you find capital of A, B. They were sharing in the ratio of 3 is to 2. C admits for 1/5 share. Okay, which he gets from A only. So capital, there can be capital adjustment. Two possibilities are there. possibility number one is C brings, say, 50,000 as capital. C's capital is given. Second is C brings proportionate capital or percentage capital. C's capital we have to find out from A and B's capital in this case. In first case, as we are given capital, they adjust capital of old partners. You prepare reval account, you prepare capital account, you do the capital adjustments, and post doing all that, you realize that A has a capital of, say, rupees 29,000. B has a capital of rupees, sorry, 2,90,000. B has a capital of 1,40,000 rupees. This is adjusted capital of A and B. C comes in for 1/5 share. A and B were sharing in the ratio of 3 is to 2. C gets a share from A. So A's share becomes 3 by 5 minus 1 by 5. B is already getting 2 by 5 and C gets 1 by 5. So what is left? 2 is to 2 is to 1. That is their new ratio. What is C's capital? C's capital is how much? C's capital is 50,000 rupees. If 1/5 of total capital, he will bring 1/5. 1/5 of total capital is 50,000. Total capital becomes 50,000 into reciprocal of this 2,50,000. When we divide it in new ratio, that means A gets 2 by 5 of 2,50,000, that is 1 lakh. A's new capital. B's new capital should be 1 lakh, and C's capital as it is will remain 50,000. What is A's old capital? A's old capital is 290. So A will withdraw 1,90,000. I'm just making a change. Let C's capital be 40,000. So 40,000 when it becomes 40,000 has to become 1 lakh. He will bring 60,000 more. And A will withdraw 1,90,000 from business. C's capital remain same. So that's the capital adjustment. Alternatively, if you are given that A and B have adjusted capital of 35,000 and 65,000 respectively. Okay, these are their capitals. C comes for 1/5 share. C brings proportionate capital. Proportionate capital means what? According to his proportion. Now, if C is getting 1 by 5, A and B have how much capital? 4 by 5. So that means this 1 lakh. 4 by 5 of total capital is 1 lakh. Total capital becomes 1 lakh into 5 by 4, which is 1,25,000. So he will get his share 1/5, which is how much? 12, 5 2s are 10, 25 is 5, 25,000 rupees. So C should bring 25,000 as proportionate capital. They could also give like this. He brings 30% of combined capital of A and B. 1 lakh into 30%, he is bringing 30,000 rupees. But when proportionate capital case comes, we can do it as one equation also. And what is that? Proportionate capital of new partner is equal to new partner share. Take that. In this case, it was 1 by 5 into reciprocal of remaining. Reciprocal of remaining would be remaining partner's share is remaining partner's share is 1, the C's share is 1 by 5, remaining is 4 by 5, reciprocal of this is 5 by 4. Multiply this with adjusted capital of A and B. In this case, it would be 1 by 5 into 5 by 4 into 65 and 35,000 are their additional capitals. So advantage of this would be 5 gets cancelled, 1 lakh divided by 4, 25,000 in one step you get new person's capital. These are asked as MCQ also. So this step becomes important. Thank you. This is all about admission of a partner. Practice solve illustrations from your books and then move on to the unsolved question. If you're do try to do the capital adjustment based questions, and one way to revise revaluation is for each and every question have a look at the adjustments, whatever is the reval related adjustments. Say spend first 30 minutes on revising reval, so for each question look at the reval. Okay, so for say 20 solved illustrations, if you have prepared in rough the reval, don't write whole thing where what will come is the profit loss same, what is different. So there is an adjustment which is different from what you have already seen in the questions. We take a note on a piece of paper which you make it as notes, right? If you are given building, that was furniture question in sample paper. If it is given to you as 60,000, it is overvalued by 20%. So how do we calculate it? How much is the change? Make a note of that part only, because before exam you don't have time to go through each and every question. They are trying to look into such different adjustments only. So keep a list of different adjustments ready with you like this. You don't have to write the full thing, just a part of it which is changing. Keep a note of those, and once those notes are ready with you, you are easily prepared to revise before exam quickly these adjustments. We can also prepare the list, but the problem is that each one has a different area which they find it difficult. So trying on your own and making your own notes will help you prepare yourself better. I might consider something as obvious, but for you that might be a little different one. So make your notes, revise your adjustments like this. Then in some question, all solved illustration, see the capital adjustment part only. You have known the reval part now. Then look at all questions from accumulated profit loss point of view. Then do a few full questions on your own, specifically the ones for which you have answer, either from the class notes comprehensive question or from a Grewal book or any book which you are using to do the solved illustrations on your own in a given time frame according to the adjustment, because these questions reval and capital comes for 6 marks, so you have approximately 12 marks to solve this. So don't take, some adjustments might be more also. Take a target of 15 minutes, try to solve a question. Not able to solve, see the answer, then do the next question. So one day you have done those, maybe after 1 week again try that question. So with that, all important adjustments will be covered. You will know how to solve it, you will know what to write as heading where, you will know how to draw how many lines and how to write it quickly with full form, and write commas while writing the amount to avoid any mistake on your part. First it helps you, then it helps others. Similarly, drawing lines and then doing it will help you more than others. You will not get mixed up because most of the questions you have done roughly. So when you are doing 4 5 final comprehensive question, at least those can be done with proper format so that you never go wrong in the topic.